Hi everyone. Good evening to all of you. Thanks for coming on time today again. So this is part 2 of our trading series workshop of this 3-part series that we are hosting with Binni. Thanks for the people who took the time to come down to the seminar as well today. For those of you who are viewing this session online, right, please feel free to have your dinner, grab a drink, sit back and join us for today's session as well. So before I start, right, don't mind, I just want to do a very quick mic check with the audience online. So if you can hear me, right, there is actually this question box. If you are joining on both your PC or on your mobile, you will be able to ask questions as well. So if you're able to hear me right now, please type in a yes to this question box so that I know that the audience online has no issues with the audio. Okay, I see a few yeses coming. Thanks for the response. So of course, today will also be an interactive session. If you have any questions for Binni right along the way, just feel free to type it in the question box as well. Now and then she will have a look at it and answer them as well. Okay, so if you are new today, right, and just joined us for the first time and you missed the first session of our this part 1 series, we have actually uploaded it to our YouTube channel and also on our IG Academy. So for those of you who are new today and have not joined the session last week, right, just allow me to very quickly introduce Binni again. So Binni is actually a professional trader that has been providing a lot of training and education for quite a long time, more than 15 years, to both retail and institutional clients. Binni is also trading in various asset classes like FX, shares, equity indices, and equities, and crypto as well. So in terms of the products, she's also very well versed in various markets. So I'm sure that she will be able to share a little more of her insights with you today on what to look out for in your trades. So if you're joining us last week, right, on the wash and rinse pattern, I hope that it has it will value add to you in terms of your trading, and of course offer you kind of like a different perspective before you execute your trades. And today she will also be sharing on another analytical framework of hers called Autobox. So before I pass on to her, right, I just want to do a very quick disclaimer. So although this session is hosted by IG, the presenter we have today, we've invited Binni with us. So just take note that if she happens to provide any form of trade direction, just take it as for educational purposes. Please do not treat them as trading advice or trading calls. Okay. So with that, I will pass my time to Binni, who will be presenting on her webinar today. Just let me change it to her slides.
Okay. All right, I'll be using Ethan's computer. Thanks a lot for joining. Let me just address those who are in the webinar first. Okay, and for today, right, I won't stand up because last round I stood up. I wasn't able to see the questions here. So this round, I'll just sit down and talk to you, Ken? Okay, good. All right, for those in the webinar, how are you? Have you had your dinner yet? To both of you, both sessions. Okay, so let me just get started. Okay. All right, the session will be, for today, I think will be until about 8:45. So it will be slightly shorter because I wanted to take a little bit more questions. All right, and I realized that later on, we are combining what we did in the past, in the first session to today's session. So I want to do a little bit of revision first. Okay, good. All right, so today we are talking about Autobox. So this is also a concept that I have designed. So earlier, the first session, we did wash and rinse. Okay, so I'm not sure whether you had experienced wash and rinse before. I'm sure that anybody who have traded would be wash and rinse. This one, I'm quite pretty sure. Okay, whether you are able to counter that, that's another question. All right, so just like a reference to me, right? How many of you had not attended the first session? So I want to know the pace that I will be going through. Okay. How about those in the webinar? Those who have not attended the first session? You just type me or no, just, I guess that is about 50% here. Okay. Now, what I will do is let me just start with the disclaimer first, all right? And then while you go through and let me know, especially those in the webinar, to let me know who hasn't gone through the first session, so I know that the speed that I'm going to go through. All right, so this is a disclaimer from IG, basically to disclaim that today's session is educational, and I have to spend a little more time to go through the disclaimer. So let me have time here. I mean, please take a look, read at the disclaimer. So the views, opinions, or anything that I've said will not be IG's Asia Private Limited views. Basically, whatever that I've said, right, will be educational because I don't have a license to provide any financial advice. Okay, so do spend some time here. Okay, good. Now, the second disclaimer comes from my company, myself. Again, that I'm not qualified to provide any financial advice at all. So whatever it's educational. Now, why is it that we are very concerned about this, right? Is I'm also training for SGX Academy. Therefore, we have to be very, very concerned about, or rather careful about what we say. All right, so we always have to flash the disclaimer for all our sessions. All right, so let's go through this one. I did my introduction earlier round in the first session. I'm just going to do it again, but probably to talk about different things. All right. I started trading when I was 17. Can you remember what are you doing? What you were doing when you were 17, or what are you supposed to do? 17. Study. I was actually studying also. I was in JC, first year JC. That's why I didn't do very well in my first year JC though, because most of the time, all right, I mean, when I'm supposed to be studying, I'm actually looking at that small little screen. I remember on my table was my table, and then the small little screen was not a computer, but it was a 14-inch CRT TV. Have you know what is a 14-inch CRT TV? With two antenna. That means antenna, and then in order to make sure that you receive everything right, you have to shift the antenna until you make sure that the feed is flowing. Okay, so I'm not sure whether you've gone through that period of time, but computer wasn't something that's very prominent at that point of time. So that's how I started. So a lot of people ask, how do you get started in this field? Actually, I was doing a lot of research. So I was flying around the region, doing a lot of research. And I remember it was probably 2002 or 2003. I was flying deep into the jungles of Indonesia. So the client that I was working for was an automotive company. So suddenly there was a huge order for huge tonnage of trucks. How huge the truck was, right? I mean, I remember standing beside the wheels. All right, I was just like maybe 3/4 to the wheel. So that's how huge that truck was. Why was there a huge demand? Because there was in Indonesia, there was sort of a huge boom in the mining and the oil plantation. So because of the first wave, right, when I came back to Singapore, I bought into a lot of related companies. I don't have insider information, but because there was a huge demand for that, I bought a lot into the, mining and oil palm plantation related companies, and that made me the first cup of gold, not box of gold or pail of gold, right? But cup of gold or pail. It was quite substantial actually. All right, and then subsequently after that, I went to write ghost writing on technical analysis because I specialize in statistics. So I wrote in tech analysis, and that's how I actually started. So now I'm doing a lot of courses for SGX Academy, and as well as training for my own clients. So clients like the brokerages, overseas houses. But one part of my job, which was not very well known to others, was actually system development. System development means that I've designed a trading system. Okay, so I'm one of not the programmer, because I mean, compared to those programmers out there, I actually don't know how to program. But I'm actually the back-end designer and the tester, you know, the back testing, etc., and the forward testing. So there's one part. So when I get into this kind of job, it's usually international job, and that's where I have a very weird sleeping hours. Okay. Otherwise, you know, one of the things that my students will know, I actually sleep very, very early. All right. So this is my trading schedule. And why do I want to flash this trading schedule? Because later on the third part, there will be an automations things I want to talk about. All right. The reason why I want to talk about this automation was because if you realize what trading is all about, and I do not know about your experience, perhaps that you think that trading can make a lot of money, but let's look at how much money you can make. So for example, if you spend 18 hours in front of your computer to make, let's say, $1,000 a day, okay, do you think that's a lot? 18 hours in front of a computer to make $1,000 a day. When I was much younger, all right, there was occasions that I can make like $20,000 a day just by sitting in front of a computer for about 16 to 18 hours. Okay, at that point of time, what I was doing was actually scalping. Scalping the market means that I was working on a very low time frame chart, all right, as low as 5 minutes or 1 minute chart, and then clicking it away. So perhaps that maybe every hour or so, I may be doing like 5, 6, or even 10 trades in a round. Okay, if you look at the hours now, which is about 18 hours, to make $20,000 a day, so that's really fantastic, because if 20 times 20, that's 400,000, right? But you can't be making every day, okay, because there will be days that you'll be losing money. But is it common to make like 5,000, 8,000 a day? Yes, that's really common. But imagine the amount of time that I spent there, and the health that was posing a problem. Okay, and psychologically, well, because then last round I spoke to a student, and the student actually came to me and said that he was facing the same thing. He doesn't feel that he's socially able anymore. Okay, so that's the biggest problem here. Therefore, my trading sort of changed at this moment, and I hope that, you know, perhaps that if you look at a lot of methodology, evaluate from the point of how taxing it is for your behavior or your time. Okay, so this is very important. Meaning that last time when we look into a method, we will be looking into, for example, how much this method is able to make me the money, all right, or how good this method would be. Okay, but you realize that at this stage, I would think that all methods are great. All right, all methods can make the money, because why? A lot of newbies, when they first started, they always start to make money, right, with whatever method that they have, even though it's no method. No method, they can also make money. But subsequently, as you get to know more and more, you find that you don't make money anymore. Okay, I'm not sure whether you do share this experience. I've passed this stage already, but whenever, I mean, there are new students coming, they will always tell me that, okay, I've learned this method, that method, I explored these, I read this, I studied these, but eventually I'm still not successful. I'm still looking for something out there. All right. The question is always whether, are there any more things out there for you to look at? Okay, so something to think about that. So what I want to talk about this 4 hours trading here in the introduction, it's because if you, I'm not sure how many of you guys are trading into Forex, or all of you are doing Forex or any form of a cryptos. I'm not very much an active crypto trader, actually, just to be very frank. Crypto is something that it's new to me, all right, but it's something that I have to pick it up all over again. And because I'm actually doing a lot of different instruments already, I don't really, and I'm not really very active into the crypto market. All right. So how many of you are doing Forex or indexes or any form that requires a 24 hours type of a involvement? I'm not saying that you are involved 24 hours, but in any case that that instrument trades 24 hours or near to 24 hours. Anybody? Or most? Or who are not? Or who are new? Just a few of hands are totally new. Okay, good. How many of you in the webinar totally new? Okay, oil and gas. All right. Okay, now what I want to cover today is I want to cover a little bit more into the 24 hours type of instrument. And for those who are only focusing on stocks, all right, I want to expose you to this 24 hours instrument, including things like indexes. If you're doing, let's say, US indexes, then it doesn't trade 24 hours, but it's near 24 hours, like 23 hours, because we still have the pre-market in the Asia session, sorry. Okay, so I trade a lot of instruments, all right, like the stocks and derivative like futures. Forex is my core, all right, and then at night I don't really involve a lot in the US market, but if I am doing that, it's mostly into the options, okay, because I like to sleep early because my day starts actually very early for me, okay. Usually at 9 o'clock, I'll be doing some sessions with my students because that's where they are back and we realize that it's a very good time to talk about it. So today, here I am doing a session with you guys. Okay, so I have three parts here. One is to revise into the wash and rinse pattern for those people who wasn't with me last round, but it's again to revise into whether you know this concept, wash and rinse. All right, and then we talk about the construction of Autobox. And lastly, the key thing is we want to use Autobox to quantify your trade. Now, why is it that we want to quantify trade? There's only one reason. We want to know whether this trade is a strong one or not a strong one. Because sometimes that when you start trading, you think that you're not very confident about this trade, but it moves. And for trades, right, that you are very confident, it doesn't really move a lot. And you wonder why certain trades will move a lot, certain trades doesn't move. Okay, so that's one of the key things that I want to address here. How do you know one can move like 1,000 points, 2,000 points, 5,000 points, for example, versus one that only moves like 50 points? What is that reason behind? So this is the reason why Autobox came out. Okay, now first let's talk about wash and rinse. I covered quite extensively on wash and rinse. Basically, what is wash and rinse? It means that because of new, I wouldn't say new technology, all right? I would really think that because there's a change in how people trade, including the big guys, the professionals, and the institutionals, right? How they are trading. Therefore, what's a method that's in the past, they are becoming less relevant. Okay, I'm not saying that this wash and rinse doesn't happen in the past, but it's becoming more and more prominent. Okay, now let me just explain a little bit of the background idea here. Okay, any of you guys heard of this instrument called equity linked notes? ELN? Yeah, okay. Now, for those in the webinar, if you heard of equity linked notes, this instrument usually deals with stocks, but it's also into the Forex. Now, what they will do is that the banks, okay, they will offer to their high net worth clients. Usually, these clients are accredited investors. Okay. Now, they will offer usually 3 stocks, in combination of 3 stocks, and they will say that if the stocks move down by X%, usually substantial percent. All right, let's say 40% or 45% or even 50% from a price, which we call strike price. Now, strike price is usually very high at an X period of time. Okay, the keyword is called X period of time. Then, if it does, and at the X period of time, it hits into that particular price, then the clients will have to pick up the stocks at a very high price. Just to give you an example here, right? For example, my RM was just telling me a lot of her clients had Alibaba, DABA, at 295 USD. Can anybody remember or let me know what's the price of Alibaba right now? Around? Yeah, $73, right? So why is it that the clients can buy at 295? Okay, and the clients just bought it now, just recently. Now that's because 295 was the strike price. Okay, and basically the bank put up this particular condition to say that you agree to buy Alibaba at 295, if only that Alibaba at the X time drops 40% from 295. Okay, what is 40% from 295? Let's say we assume that it's $200 or even $150. All right. So when Alibaba was at 295, it was at the peak, right? Nobody will ever think, hey, Alibaba can drop by 40 or 50%. It's almost like impossible. So if it does, then they're going to put in this order. And if it does, right, the clients would have Alibaba at 295. On one more condition, it's only at a fixed date. That means the bank would say only at last day in December or last day of June. All right. So the time and the price, they are fixed by the banks, which means that the banks basically know that if Alibaba is at this price at this particular date, then a lot of clients have to buy at an ultra high price. Okay, so what do you have to do then? What you have to do is just have to make sure that you control the price for just one particular day. That means for one day of the year, all right, or maybe 2 days of the year, depending on how long is your particular contract, right? You just have to make sure that Alibaba is at this particular price. Okay, so therefore, because of a lot of all these new instruments coming out in the market, you find that price will behave in a very weird manner at a certain period of the time, especially go and take a look at each quarter close. That means each of the quarter ending quarter, right? Go and track back what happened in the last, let's say 5 years into key stocks. Towards the end of the quarter, all right, industry people would say that it's a triple witching. That means expiry of futures, expiry of options, expiry of something, but there's more to it. All right, so take a look at that and you realize that every time near to the quarter, weird things happen. All right, and then these constitute to things like a wash and rinse pattern, meaning that wash means that a move often in the opposite of your original direction. Okay, and a rinse would be a subsequent move that is in your original direction. What does it mean? It means that, for example, you have a long position. That means you bought in a position, you buy. And when you buy, what you want to achieve price to move up. But instead of price going up, it kept dropping until you say, I can't stand it anymore. What do? You cut losses, right? When you cut your loss, then what happened? You will mysteriously move up. Congratulations, you are with me. We are in the same gang. Okay, so I'm not sure whether those in the webinar, whether you had this before, because I usually cannot see responses from those in the webinar. All right, I thought that it's only me who had this experience, but I can feel that I can see it's all of you, almost everyone. Okay, now, so this rinse, it's in the subsequent, in your opposite direction, means that it moves in your original direction. You say, why does it always happen to me? But you can't confirm that with your friends or other people out there. Okay, so that's why a lot of retailers, they lose money and the professionals actually gain money. All right, now let's take a look into this particular chart here. All right, I'm just going to do a little bit of a marking to help you. Okay, this is pound yen. Okay, and it's a very recent chart. So for those, if you can see the date, right, it's about August 2022. Okay, now this will be September. Right now we are in the mid of October, right? So it's something that's really very recent. Okay. And this is a daily chart. Now for wash and rinse pattern, all right, it's good, right, if you can look at it in a higher time frame, regardless of the instrument that you are trading, whether you are doing stocks or whether you are into Forex or cryptos or any instruments, all right? And I've mentioned this before in the last round. Retailers cannot fight the institutions in terms of the lower time frame. The machines are super machines. Huh? I'm not talking about super machine means that they have tons and tons. They are how to say, the algo, all right, it's just fantastic. We can't beat them in the lower time frame. But I think, all right, with my experience with them, we can win them or we can be with them in the higher time frame. And we are talking about trading with a reference, okay, to the day chart or the week chart. Okay, so therefore, wash and rinse pattern happens near to, if it not happens, it's best view if you can actually read at that from the day or the week chart. Now, as a revision, we can see that this is a little bit of a high here. How do I know that this is high? So it looks like mountain, okay? So I call this, or rather you will know this as a resistance, okay? All right, so that's a resistance. So the typical way for people to behave, right, is to draw lines on this resistance. Okay, the common lines being drawn would be things like horizontal lines, that's easy, or trend lines, slanting lines, we call that trend lines. And then we draw it based on the previous high and then connect with the previous high. And surprisingly, we saw some reaction here at this blue color arrow here, all right? Okay, and then we saw this candle here. Okay, the one that I'm marking right now is a green color candle. All right, I think that you had experience before from the past session. You think that I'm going to trick you. But for the benefit of about half of you guys who wasn't here, one of the concepts that's very, very well known is actually to trade breakout. What is a breakout? Breakout means that when you have resistance here and you have resistance here, and then when you have the third resistance here, and when price penetrate above the ceiling, because resistance would be like your ceiling, right? So when price can move above that ceiling, you think that there's a chance for price to go higher up, isn't it? Okay, so this is actually a very typical concept, okay, which is a typical price action concept, which is called a breakout. All right, so just as a, you know, as a like a game, okay, I call it a game because the last round somebody asked me, it's meaningless because it can go up 50% up, 50% down. But as a game, all right, do you think based on this setup here, is there a higher probability that it is going to go up or it is going to go down? Just make a guess. Cannot be lah. The way that you are answering and the way that I'm asking, you will be thinking it's a trick questions and you'll be answering it's a down. Come on, think in terms of your heart. That means that when you see this, sorry, wait, when you see this and when you see this and that you are really, really in your trading, do you think that it's going to go up or go down? For those in the webinar, please let me know. Oh, sorry. Okay, got it. Yeah. Any thoughts here? Up, okay. Up, please raise your hand. Come on. In the webinar, up. Very good. Okay, thanks. Very good. So that is really what you think, right? Okay. Now this is a very, very recent trade. And of course, in my session, it's a trick. You know it, right? But in your heart, you know that this is up. And this is something I want to share with you. There is no way that we will be we will know that it will be a up. The only thing that we can do is that in any case that it moved up and it really moved back down, then what can we do? So this is the biggest thing that I can share with you today. Okay, because it might be that for this candle, it can break the resistance and go all the way up. But if it doesn't, then we'll be able to draw a wash line. Okay, so how to draw that wash line? Very simple. We have a bullish setup here. One is called bull, right? The wash line that you draw is that if this is a bar here, all right, and that if price is to close above a previous high, so we just have to say that this is bar number one, and then this is bar number two, all right? And then if price can close above the previous high, okay, previous high, right? Then we call this a wash line. So if price continue to go above that wash line, so this is essentially a bullish setup. Okay. However, all right, if wait, I want to find eraser. Oh, don't have eraser, can have to erase all. So if, right, however, if price closed above the previous high, and yet, right, it cannot stay above the wash line, and then it goes back down like this. Okay, now this is called a wash bar here, and this is called a rinse bar if price come back. Now this, to us, will not be a bullish setup. It is actually a bearish setup. Okay, it's the reverse contrarian way of thinking. Okay, so the wash line is very important. First, we will assume that price moves up, and especially when you can detect any form of a resistance here. That means any form of resistance here near to the wash line, and that bar, which is the wash, has been specially pushed up, all right, resisted, and it topper the other side, which is to close below the wash line. So this becomes a rinse setup. So in this case, here, we'll be taking a short at this place. That means to sell. Okay. Now, taking what you've just understood from here, and then where should we be drawing the wash line? Okay, so these would be the bar number one, which is the current bar, the one that broke through, and then this would be bar zero, because we always compare the current bar with the previous bar. We don't jump any bar, just compare to the past one only, the one that's in front. Okay, so therefore, I'm just going to draw in the wash line. And for us, the wash line, we will color code. That means we'll always draw a bearish setup wash line as a green color line. So therefore, I have to draw this as a green color line here. Okay, so if price managed to close below this, then it means that whoever who bought at this green color bar here would be buying at the highest price. Okay, and then if price does really move below that wash line, it will be a wash and rinse. Okay, why is wash and rinse? Those who bought here at the green color bar would be making a loss. Okay, all right. Now, I also said before that wash and rinse is very prominent, very common, all right, during very obvious levels. The more obvious the levels, the more frequent that wash and rinse will happen. Okay, because the machines can see these levels better than better than us. Okay, we are smarter than the machines, but they can see it faster than us. Okay, so let's take a look at what happened. And just erase this, and then subsequently, this was what happened. Okay, price pushed up. Okay, so this was the wash line here. So price push up here. So we draw in the wash line. So instead of, continuing upwards, price push up and then it comes back down. So therefore, these would be our wash, and this part here would be our rinse. Okay, so this is basically a wash and rinse setup that happens very recently, and we traded this, all right, and it coincided with an event because this was pound yen. It coincided with events that happens in the UK. All right. Okay. Now, if you go back and have a look at the whole thing, right, you will realize that somewhere to the left side had a little bit of a resistance. Okay, so this was just a huge push, all right, for people to buy right on the top. In other words, for the big guys to unload that particular position to you, and then when it ramped it down, was actually very, very fast and furious. Okay, I'm not saying that breakout is not good. I'm just saying that be aware that this can happen. Okay, wash and rinse, it happened, it's very common, and if it really happens to you, we know how to counter that. Okay, so the key thing is about the wash line. Now, a few revisions is that in wash and rinse, it is not a candlestick pattern, meaning that you might resemble a candlestick pattern, but it can have a very lengthy pattern. That means that I can have, for example, a bar that closes above it. So this could be my wash line. I can have many, many bars here for as long as I want. It doesn't really matter. And then ultimately, it can rinse back down. Okay, so it doesn't matter how many bars there are. Okay, what concern would be price moved up or moved down that wash line. And number two is that it must be very near to the support or resistance, and it must be near, that means to trade with the trend. Okay, so let me just quickly draw in the bullish pattern here. That means that if we are talking about a bullish setup, then the bullish setup means that previously prices must be coming down. That means it has been actually coming down. So one of the bar had a close. So the prices were coming down, and then one of the bars, all right, had a close below the previous low. So you can draw in the wash line. If price continue to move downwards, then it will continue to be bearish. More wash line can be drawn in. But if price doesn't, instead, right, it closes back up, regardless of the numbers of bars here, it doesn't really matter. As long as it closed above that wash line, then this will be considered a bullish setup. So for my use, I always color code the wash line. That means that when it's green, it would be a bearish setup. When it's a magenta, it would be a bullish setup. Okay, I rely a lot on color coding. So if you can, in your system, you can also, put in all these color codes to help you. Now, why do I want to encourage color coding? All right, it's because that when we are trading, we are in this very intense psychology. Okay, we are always very stressed. If you have too many complicated things out there and things are not clear, you find that you get very, very confused. You can't make proper decision. All right, so it's better that you can color code your stuff so that it's easier for you to recognize it. Okay, now let's continue on. Now, when you take a look at these two things, time and changes, what comes to your mind? When I say time and I say changes, what's common between these two? Any guess? No guess? Time and changes. They are? Anybody from the webinar? Who can make a guess? They are constant, right? Time is constant. Time don't change. And changes, that's constant as well. Okay, so in trading, I emphasize a lot on things which are constant. Because only when you have things which are constant, it can last through test. That means that it can stand the test of time. Okay, so if time and changes, they are constant, then there is a need to import time inside our trading methodology. Meaning that just now we saw wash and rinse. Wash and rinse is purely a method of price. That means that we purely look into price only. Okay, but if we can incorporate time into price, that would help us a lot. Okay, so therefore, in the use of Autobox, we are incorporating time into the analysis of price. Okay, and Autobox with wash and rinse, it works together. All right, so this is IG platform here. All right, so if you do have IG platform, Let me just talk about how you can set up your Autobox. Unfortunately, you have to draw it yourself. Okay, there are automations which I've designed, but it's not available in IG platform. But let me just walk through with you. Right now, the first thing in any instruments, whether you are doing stocks or you are doing Forex or cryptos or indexes, we would draw the auto boxes in the weekly time frame. That means the first time frame to start drawing is to draw using the week. I don't care whether you are scalping or you are doing swing or you are an investor. Okay, we will start drawing the boxes from the week. Now, how do you draw that? In IG platform, all right, at the chart there, right, you're gonna find this little bit of a pen tool, okay, the tool that looks like a pen, right? And then once you click on it, you can see things that you can draw. You can draw your alert wave, you can draw your channel, you can draw your horizontal lines. But then there's one thing here that you can draw, which is your rectangle. You draw your rectangle here. All right. Okay. Now click on the part that you can draw your rectangle. You can configure the color of the rectangle by just use a bit of a default coloring. All right. So your chart time frame would be at the week. That means at the weekly chart time frame. You always start drawing from the week and you draw a rectangle. Okay. Now how to draw that? You just have to take that high to the low of a particular candle, because each candle is a week. You just have to take the high and then take this rectangle tool to draw to the low, just like that. And every week, right, you just have to draw one more. Okay, that means that the first starting, it's often tedious, but you know, as long as you don't erase them, erase the rectangle, you just have to draw one. Now, which means that, for example, if I want to draw on this particular one, I just have to take the high and then drag the rectangle all the way to the low, and I'm just going to come up with a rectangle tool here. Okay, of course, as I said, right, you can automate the drawing, but when I was teaching in the early days, right, unfortunately, my students, they have to draw them. Okay, so this is the rectangle that you can draw. Right, when you draw this rectangle, all right, let me just clean that away. Now, what will be the effect that you want to achieve? You want to achieve this boxy type of a box here that helps you to change your view of what you see. That means that no new inputs added, but basically what changed is how you view the charts. Okay. Now, so what are things that you're going to view the chart? You're going to see, for example, in this section here, that means that this, let me just mark this one here, 1, 2, 3. And these 3 boxes here, they are near to one another. What do I mean by near to one another? See that this was the height, this was the height of the box, and then this was the height of the box, right? They are actually quite near to one another, if you can see that. Okay, now when you look at it in terms of just candlestick, you can't see this difference. But when you draw that in the boxes, you can find that box number 4 and 5. Sorry, I just want to skip this. This 4, 5, this one will be 6 and the 7. You find that box number 6 and 7, they are very close to box number 1 and 3. Okay, there is a change in terms of your visual effects. All right. Now, so if you take a look into, for example, 2, all right, is a little bit of outlier. So you have a bit of a cluster in terms of your support and resistance. So that's what you want to achieve. You want to be able to draw in your rectangle so that you can see the support and the resistance very clearly. Right. And you can use this to project into the past. Okay. Now, take a look at here, number 4 and number 5. What I did, right, is I draw in number 4 and number 5 as a particular level here by connecting this. Okay, I formed the red color dotted line. It sort of tells me that along this place here could be a resistance for this particular instrument, Pound Yen. Okay. Now, by also connecting the highs of 1, and then you map it to 3, and then connect a little bit to the 6 and 7. All right, you are able to say that there could be a little bit of a resistance given by 1, 3, 6, 7. Okay, all right. So this would be how we draw in the resistance here. But what is the difference here? The difference is that with Autobox, you are able to quantify. You are able to say that the green resistance, the one that is green, they are given by 1, 2, 3, 4 boxes high. Okay, so that is the difference here. Previously, we only look at resistance. Now, by drawing in the boxes, you gave another inputs to the resistance that you are drawing. They are given by 4 boxes high. Okay. The one which is lower, the one which is, let's say I mark this as R2 and R1, the one which is R2 here, which is slightly lower possible resistance level, they are given by how many boxes? Okay, how many boxes? 2, right? 2 boxes. Now, next other input, as I said, right, time is constant as well. So when I say time is constant, what's the difference here? Now, when time is constant, it means that every year has how many months? It has 12 months. That's fixed. Now, every month has how many weeks? 4 or 5. It's also fixed. Now, every week has how many days? 7 days or 5 trading days. That is fixed as well. Okay. Now, if you look at time, and if time is equal to money, then if you see R1 versus R2, can I just ask one question? Which resistance do you think will be stronger? Is it R1 or R2? Okay, then next question, why? More boxes. Okay, now, just now, when we talk about resistance, or when you learn about resistance, you only learn about just drawing a resistance based on the turning point. Now, when you can box up prices by segmenting time, the keyword is called segment time. What is the meaning of segmenting time? It means that you break time into logical periods. That means logical blocks here. What is logical blocks? 1 year has how many quarters? 4 quarters. 1 quarter has how many months? 3 months. And 1 month has 4 or 5 weeks. And 1 week has 5 days or 7 days. Okay. So if you can break it in this manner, you are able to achieve one thing, which is you are able to quantify your support and resistance. Okay. All right, now let's take a look at the next one. Okay, I won't just stop here. I will just give you plenty of revision. So let me just continue with this. Okay, now, so if you take the weekly chart, that means just now we drew that boxes in the week chart, right? Right now, what is the change? It's still the same chart, still pound yen, still the same time frame, but the only difference here is that I switched that weekly chart into a daily chart right now. Okay, now take a look at the boxes we have drawn. You can count easily inside the box because 1 week would be equal to clearly 5 trading days. If you count inside the box, you will see 5 bars. If you don't see 5 bars, it means I've drawn wrongly, not the technique is wrong. Okay, all right. So let's do a little bit of accounting. Let's say inside here, so this is 1, 2, 3, 4, and then 5 here. Okay, so each one is very constant. Each box has 5 days. Okay, which means that in the daily time frame, by boxing it up, I'm able to see what happened in the week. That means what is constant here? What is constant would be time. 1 week has 5 trading days or 7 days. All right. I'm able to look at by drawing the weekly boxes in the day time frame. I can see what I call a multiple time frame analysis. I can tell immediately that week to week for these past 7 weeks that I've drawn in here, price is flat. Okay. All right. Now, if you take a look at this place, this is where I want you to see, and then how much the pound yen has moved. Okay. Now, I will need you to paint a story, because when we are trading, what is the biggest problem here? When you go in and you analyze the chart, the biggest problem is not the method, is you. Okay. Why I say is you? Now, when you look at an outcome, you're going to say, hey, look, this is a fantastic trade. I should have done this particular trade. I should have, I must have, I need to. If I can do it, I'd be very, very rich right now. The question is always at the point of time, you decided not to do it on a wonderful trade, or you decided to do it on a lousy trade. And that nick of time. Okay. Now, what makes this change to say that I must really do this trade? It has an issue with the type of analysis that you are doing. Okay. Now, a lot of time, right? You find that when we attend lesson, I'm not sure about you, but I find that my students are getting energy from me, because then they say, okay, Binni say that this is good. I think let's go. Okay. There must be a reason why I think it is good, but you know, trainers are not always around here for you. So you must be able to analyze yourself. Okay, so if you take a look at this place, this one here, let me just point to this. This was that wash and rinse that I asked you to look at just now. That means that if you see this small little green arrow that I've drawn in here, so this was that wash bar. Okay, and this one is your rinse bar here. All right, if I were to draw in the wash line, so these would be what happened. Okay, and anybody realized that this move was fantastic, gigantic, because these moves move from average 164 all the way down to 150 in less than 2 weeks. So in terms of Forex, this is a movement of 1,500 pips. So that's a lot. All right. Okay. Now the question is then, why this movement resulted in such a huge move? There must be a reason. Okay. Now, if we can quantify how strong this particular resistance was, meaning that if I'm going to erase everything here and just take a look at this wash bar. So this particular wash bar here, okay, the one that is in green. Now this wash bar was a near to solid green bar. If you put in perspective this particular solid green bar, can I ask whether this solid green bar, whether it happened in a resistance zone or it happened in a support zone? Just from the box's point of view. How about those that's in the webinar? Does it happen in the resistance zone or in a support zone? In the resistance zone, right? Okay. Now, when it happened in the resistance zone, yet if you cover up the reds, you see this green bar as like super bullish, because just now when I tested you, you answered that I actually am thinking of going long, right? If you put in perspective what happened to this Autobox here, now what this Autobox is telling you is that the whole chunk here, this whole chunk, it was a resistance that's made up of how many weeks high? 7. Okay, whether 7, it's a lot or not, that's subjective. But just on investigation, this 7 boxes has been staging here for 7 weeks already, and price was being pushed all the way up, all right, with one last resistance over here. So Do you want to go long on such a strong resistance here? You really want to question again. Am I right? Okay, on hindsight, you want to question again, right? But what if you didn't see it and you were wrong and you realize that this whole pattern is in fact a WR, wash and rinse? You can quickly go back and check the auto boxes, and you would have realized that there are a total of 7 boxes here. Okay, now before you know about auto boxes, you would be seeing these as a resistance, and that would be a resistance. But today with auto boxes, you are able to quantify and say that this is not about resistance. This is a resistance that's made up of 7 weeks high. That is the key difference here, if you were to quantify using the auto boxes. Okay, a simple concept, but it transforms on how you analyze at that nick of time. I'm talking about at the point that you are trading by yourself. Huh? That means that when you're trading alone, all right, and there is a need to cut your losses. I'm not saying that you're making profit. I'm saying that there is a need to cut your losses because you have entered long. At least you are able to say that, okay, I'm going to cut my losses because there are 7 boxes there, and it's not 1, it's not 2, but 7 weeks. That's about 2 months in duration. If I can use it together, at least, I didn't make this money, but at least I've cut my losses already. So that is a change in terms of the mindset, which I want to cultivate that. Okay. All right. Any question here? Yep. Okay, now in later on example, I will be showing you, right, the implication of a quarter boxes. Month, usually we don't use month, okay, because the quarter would have taken care of that. And then and the next more prominent is to draw on the weekly boxes. Unfortunately, there is no time duration. It doesn't fix that. But I would think that anything, right, that is within a year is good enough to give you that gauge that it is a good, strong support resistance. A year time frame. That means you don't need to scroll too far out. What I usually would guide my students is this, right? When you string your chart, all right, until so small that you can't see the candles anymore, and that would be where you want to stop at. That means you go to the weekly chart, right? And then you string your candles until so small that you can't see your candles anymore, and you don't want to actually look anymore further. That will be the time frame that you wanted. Okay, if that doesn't help, then it should be a year. A year is what you need to look at. Okay, so I just answer a few questions in the webinar. What if the candles at R turn green? You continue to go long. Okay, that means that I would have assumed, all right, you might have gone long, right? And then if it continues to break above it, you will have actually gone long. Okay, I'm saying that at the resistance, be prepared for the wash and rinse to happen. All right, if it ever turns the other way, then you have a way to counter it. So that's number 1. Number 2, of course, right? It's not reasonable for you to buy. I mean, if you are trained like myself, then we are trained to just wait a little while more. Okay, because the idea is that you want to buy when it's at the low. Obviously, in this case here, you are buying at the high. That means that if historical high was all along at 166, you are actually buying at the high. So I want to avoid this to happen. Okay, the other way is position sizing. If you see that at R1 or R2 has a 7 weeks of resistance already. All right, and every trade you want to put in $500. All right, but this one happens to be near to that resistance with 7 weeks high. Would you want to put in your full risk? You probably don't want to do that. Okay, so there are many ways to use it. Okay, and the many lows between the 7 weeks and the last high. Now, there are questions on all these boxes here, right? Okay, all this. Let me just try to draw it, because I don't really draw the boxes because all my boxes are all automatically drawn. But if you take a look at this one here, so these boxes would offer the other support level. You realize that at the first time when it fell, right, it dropped and it hovered here to that boxes high as a support. So this was that support, right, that was broken, and right now, sorry, this was that resistance, okay, that error, sorry, I didn't write the error probably, but see this as error, that was broken above it, and right now in turn become your support, and eventually price fell. Okay, I mean, I was trading here just to let you know, right, what happened in our trade. So we caught this here, we caught this move here. Okay, so we got that trade, and when it was here, I think it hit into a weekend. So we were very happy. I still remember I didn't do pound yen, I did pound CAD. And on a Friday night, I did pound CAD, and just in 4 hours or 5 hours, I made 180 pips. It's quick money, okay? And 180 pips, one standard lot, 180 pips is $1,800. So you just put in 5 standard lots, that's your $8,000 there already. So remember, I closed it, and then I went swimming because it was a Friday evening. So I went swimming with my daughter and my husband. I was so happy that I took a photo. You go Instagram to see, I took a photo. 180 pips for pound CAD, go swimming. What happened? Next Monday, I think it was next Monday or maybe which day, I can't remember already. This huge down. Faint, I don't have anymore. That's the reality, right? Okay, but you know, in terms of trading, then at least we wasn't trapped here. Okay, all right. Yeah, at least I'm not long, and I'm happy that I took that money. And should I not go swimming? No, I should continue to go swimming, right? To swim, but I have the long-term position in pound. That's what a lot of students know about it. So at least I still have my long-term position in pound, all right? Short pound, not long pound. Okay. If you look at my YouTube channel, I did a prediction of pound sing when pound sing was 1.6 or 1 point something. I actually in that recording I said it will go to 1.54 or 53. Okay, it reached there, and then when it was at 1.53, I changed my mind. I quickly messaged and said I think it will go to 1.38. But it went up. It went up eventually. I still have that short position because I had that at 1.8, 1.9. So I was waiting at 1.35. Since I can't get out now, just wait. Yeah. Okay, but that position was a very nice profit. Okay, let's continue. Okay, so what defines a big move? Okay, so therefore, let me just do it here. So if you take a look, this is an auto box, which means that the boxes are automatically drawn. The currency pair here is dollar yen. So you know the dollar yen make quite a huge move, okay? And this is a daily chart. And because this is a daily chart, one box is 1 week. You can go and count one box, right? Would have 5 candles inside. When you start counting your candles, start from the dotted line here. So this would be a 1, 2, 3, and 4 and 5. Okay. Now, dollar yen at that point of time, right? If you take a look at the green color boxes, green color lines, right? That point of time, the price here was about 111. Okay, about 110.75. Okay. Now, see this one bar here. So see this bar here, the one I'm pointing. Okay, see this bar here, right? Okay, now this is a day bar, 1 day. Now, can I just ask the audiences here and audiences in the webinar, this particular 1 day, all right, how many weeks this 1 day broke in terms of resistance? Meaning that this 1 day traded above how many weeks of resistance? I'm just going to clean away this one here first. All right, both in the webinar and the seminar here, right? How in this one day, that means this particular one bar here, right? The bar here, okay? How many weeks did price break? Okay, I will just count together with you. All right, so I count this as 1, 2, 3, near, okay? 4, 5, 6, 7. Okay, here is near 8, 9, 10, 11. Okay, so one day it broke 11 boxes, week boxes. So one day broke 11 weeks. So can I ask, right, do you think that this one day is a strong move? Likely. Okay, now, so what I did, or what you can do, is you can draw in some resistance here for sure. Okay, very easy to draw the resistance with the boxes, because now it becomes very visual already. You know that there are some resistance here. You know that there are some resistance here. Easy? Becomes very visual, right? But what I did is I actually drew it at the highest point here, and then I draw it here like this. Okay, now what I'm going to do is I'm just going to erase this and then ask again. Now take a look at this one. This particular one, right? You realize that this one day it broke another of the high here. And this high has been a high for a long period of time, which means that this particular structure, this week and this week, basically attempted to move above this whole structure here. Do you agree? Okay, if you were to box them up, okay, and this whole structure is about 12 weeks. So how long is 12 weeks then? 3 months. And what is 3 months? 1 quarter. Okay, now why is a quarter very important for the institutional? Because that's when they are doing a lot of what we know as a window dressing. That's not true. It's not window dressing. It's really how they do their rebalancing. Okay, and it's really how all these different derivative instruments are being structured. That means structured instruments. Okay, so these structured instruments, right, are happening at each of the quarter windows. Okay, so now if you were to look into what happened here, it means that dollar yen have been really struggling to move above it for this particular 12 weeks or 11 weeks, right? For 11 weeks, it wasn't successful. It has been resisted here. Okay, now finally it broke through. All right, and you realize that this place here, why is it that if you just look a little bit closely, right? Now this particular place here, this candle, I know that you can't see very clearly. Now this candle is what we call a doji candle. Okay, now implication of a doji candle means a bit of an indecision out there. Okay, now what happened was that there was an attempt of dollar yen to break through to the highest point. Now at this point, the attempt was not very successful. In fact, if you see the next slide, let me just get the next slide. Okay, if you see the next slide, right, that means what I did was I actually zoom it in for you to see. So this was that high point of dollar yen. So this was the whole duration of the 12 weeks it attempted to break. So price broke above it. Now, when it reaches somewhere around here, see this pattern here. What do you call this? This is a typical wash. Do you see that? That price washed above it, and then price actually rinse back below it. So why did this wash and rinse happen? Because there was a resistance somewhere around here that in the first place, dollar yen didn't manage to break. Now think in terms of you breaking down a door. For example, your room is locked and then somebody is trapped inside. When you bang a door, that door, right, do you think you're gonna break the door at one try? Yes or no? Unlikely, right? You're probably going to hit the door once to weaken the structure. Then what happened? Maybe you break again, then the second time will be successful. Why is that? Because the first time is merely to test and to weaken the structure. The second time will be successful. All right. So what happened at dollar yen here was that it tried to break above that resistance, wasn't successful, resulted in a wash and rinse, and subsequently it hit this support again. So this was a support, and then when it hit that support, it formed a bit of a doji, and see what happened. This was your wash. Let me just go through this particular again, right? See this here, this one? You see that there was a black color candle. Okay, a black color candle that closed below the previous low. So therefore, you are able to draw in a wash line here. So this would be the wash line that you're drawing. So this is a bullish setup, a bullish wash line. Okay, and when price closed above it, above the wash line, that becomes your rinse. And see that? Okay, now this wash and rinse happen where? Happens near to the place where it was a 12 to 11 weeks of boxes. Okay, now this will explain why dollar yen from around 111 all the way to 113. In fact, now dollar yen is trading near to 149 non-stop. Because if you look at what happened from the boxes point of view, all right, why dollar yen can move after this to 149, the whole thing is this. If you can quantify the boxes, okay? Now, let me just show you everything. Take a look at this. This is dollar yen right now at 145. Today, dollar yen is trading at 149, plus minus, before I left my house. Okay, now what is the value here? This is 126. Now, what was this value? This was 118. What was this one? This was 115. Okay, at 115 here, this one, dollar yen broke through 11 weeks of boxes. Is it 11 weeks? Sorry, let me just do it again. Not 11 weeks, huh? This is the weekly chart. Because it's so small, I can't see, but just let me raise that. This is the weekly chart. And in the weekly chart, right, one box is a month. Okay, so if you take a look at dollar yen at 115 here, this particular movement of dollar yen breaking through 115 would be a break of how many months? You can start counting. Okay, I mean, roughly, it will be this one here. If you can just quantify how many months, I think roughly it's a year. No, 3 years. Okay, you can count. All right. Now, when it's at 118, it took about a week or two to break through this whole structure here. Okay, this structure was from 2017 all the way to 2021. So that's about how many years? 4 years. Okay. Now, when dollar yen broke through 126, now see the typical formation. It went through it, come back down to this particular level. Okay, given by the boxes, right? Now, when dollar yen traded near to 126, then what was that duration that it broke? It was this whole duration here. Okay, my question to all of you, whether in here or in the webinar, all right, is it surprising for dollar yen to move from 126 all the way to 149 now? Why? Because dollar yen broke through 1, 2, 3, 4. You can start counting and counting and counting. You realize that as long as you can quantify, then you basically can catch a big move. Okay, all right. So question to all of you, have you traded dollar yen? Do you know this? that dollar yen had a big break out of it? Yes, but do you know the reason there? Okay, so it was because of this huge break. Okay, and you realize that prices will react very much to all these levels here. Okay, why is that so? If I were to just move to the next one, okay, the next one, right? This portion here was dollar yen at this place. That means that I want you to see this circuit place here in dollar yen. Okay, now dollar yen hit this portion here, right? And then into this section here, right? There are trades for us to do. That means that this was a very important level and dollar yen broke through it and come back down. And can we take this into a trade? The answer is actually yes. Okay, because if you take a look at the next chart, right? So this was dollar yen in the circle in the oval shape. Okay, now for once dollar yen had a wash line. That means it keep coming down. You see that it keep coming down, and then somewhere along here was that very strong support level given by the boxes. You realize that this was a wash bar here, but price, did it close above it? Did it close above the wash line? So this one was the wash line, right? Did price close above the wash line? Never. It never resulted in the bullishness, right? Okay. Then let's take a look at the next one. Okay, so there was a wash line here again. Of course, I want to mention you can draw a wash line here, but it's not relevant. We talked about it before already. So there was a new wash line here. All right, but price, has it closed above that wash line at all? No. All right. Then next, what happened to here, this one? Can you draw a wash line? Yes or no? Okay. Now, how to draw that wash line? Very simple. As long as price closed below to the previous low, you just draw a horizontal line. You realize that, let me just clean away all this. You realize that you are able to draw a wash line based on this, and the signal will come in somewhere around here. This one here, or more conclusively around these two bars here. So these will be the two bars. And it coincides with the auto boxes that tells you this was a retracement to the very strong move and dollar yen actually burst up from here. So that was a very easy trade that we did at that point of time. Okay, by combining two things. One, looking at wash and rinse. Second thing, at quantifying the move. That means not only that you want to know this is a wash and rinse, you want to know that this wash and rinse happen at very important region. All right? Okay. Okay, so let me just continue to reinforce this concept for you. If you don't understand at this point of time, don't worry, because I'm just going to reinforce that. That means to show you the full picture. So let's how to increase the reliability of auto boxes and WR. Now, number one is that you always want to trade with the trend. Okay. For example, this is a trend line here. You agree? How do I draw this trend line? What I did was to just take this as a turning point and then this as a turning point and project to think that these could be a resistance. Agree? All right. How many of you are sure that this is going to be a resistance and you have gotten the line correct? I mean, when you are drawing your own lines, right, you are just do not know whether this is the correct line, isn't it? Okay, because I can show you that I can draw another set of lines which looks like this. Why? Because I can take this orange line here, I can draw this line by connecting this point to this new point here, and then pass through this point, and my conclusion would be totally different. Why is it different? Because the first black line says that it is being resisted, but if I draw in the second line, which is the orange line, it says that it could be breaking out of that resistance already. Agree? So that perspective becomes very different. And what should we do now? Should you be looking to buy or should you be looking to sell? You have no idea. Then you say it doesn't matter. Okay. Apart from drawing a trend line, which I have no idea whether they are correct or wrong, I can draw in another more lines. I can put in things like my pivot point, Ichimoku. I can do things like my moving average and put in as many things as possible I can to try to come to a conclusion. All right, but you know that this doesn't help, because even if I put in a horizontal line here, it just doesn't tell me anything, because at the horizontal line that I put in, price isn't near to this horizontal line. Okay, my question to you right now, then what should you do? Should you be taking a long buy? Should you be taking a sell? Should we, or what, wait? Or don't know, give up? Okay, so these are the problems that you will encounter when you are trading by yourself. Correct? Because you simply do not know whether the lines you've drawn are correct or wrong. Okay, so a resistance line, a trend line can be very nice on books only after you have seen things happen, right? Okay, so let's try to put in what we learned today. Okay, we learned things like how many boxes, but there's no boxes here. But how about we draw in some wash lines? There's only one wash line that you can draw between 1 and 0 here. So what's the wash line? Green or magenta? Are you looking to sell or are you looking to buy? Buy or sell? Sell. Okay, always think in terms of this, right? When you want to sell, you want to sell high. Has price actually gone high, up? Yes, right, it is actually moving up. So you are looking to sell, okay? Because 1 and 0, 1 had a closed above 0 high, so you can draw only a green line here. Now, which also means that if price continue to move up, you basically can't do anything with the wash and rinse method. But if price is to close down, then what can you do? You can sell, right? Okay, because that's the method. Okay. Now you need a little bit more confidence, because you can't just be relying on wash lines, right? You need to make sure that around this region here is going to be a strong resistance level. So what should you do then? You should be quantifying it. That means you want to attempt to quantify this particular resistance. Okay, so right now I have the same chart that looks a little bit different, but it's the same price feed, same chart. I am quantifying that resistance here. That means instead of using the trend line, that means instead of drawing trend line, instead of drawing anything, I just want to ask myself at this point here, if I were to look back, okay, how many boxes high or low will there be? Okay, so I'm just going to draw a line like this. Here we go. Around here will do. Okay, now when I move back there, can anybody tell me how many boxes high or low does this particular level, which is called 1, happens to be near? Around, plus minus. 1 and 2, plus minus around there, right? Some of you might see 3, it doesn't really matter. Okay, don't worry. Now just look a little bit more left, look more left, you realize that there are very clear 2 boxes here, correct? Okay, if you were to draw this all the way, and plus you know that I've probably hide some here, right? Some of that. Okay, now you're going to have another 1, 2 boxes here. So it means that if price is ever being resisted here, you're probably going to have a bit of a resistance given by 1 and 2, and maybe around here 3, and maybe 4. So you're going to have 4 boxes, and because this is a daily chart, 1 box will be actually a week. So you're going to have 4 weeks here. Okay, so just as a guide, right, any resistance or support that is more than 2 boxes, I repeat, any support or resistance that are more than 2 boxes, they are considered strong and good to go for a wash and rinse. Okay, to sum up what I'm trying to say, just to repeat again, if you encounter in a day chart any support resistance that consists of 2 or more, then For a wash and rinse, this is a good, strong support or resistance level. 2 or more will be good enough. Okay, all right. Now take a look at what happened. So once you have this already, all right, if you can see, price had a bit of resistance here. You can predict that there could be another one more here, which is the green color here. All right, and basically you're just waiting for price to either move up like this, to go up to hit here, to see whether there's any wash and rinse. If not, you want to see whether price can react around here to result in a wash and rinse, right? And your wash line will be drawn here first, which is, this is your wash line. So you have your plan all mapped out already. When it really happens, you just have to click the button. I'm not asking you to click the button because this trade has already passed. So that's not financial advice, all right? But this is a trade planning. That means your planning would be around level 1 here and level 2 here. All right, you are interested in level 1 because it is made up of how many boxes high? 4. Okay, and I said before, anything that's 2 or more is going to be a strong one. Okay, and then at level 0.2 here, right, it's also made up around approximately 4. Okay, so we're waiting for trades around there, and then let me just clean this. This was the outcome. That means just now, when I show you this trade here, so this was that wash line. This wash, and then this is the reach. Okay, and this instrument was CN50, and then that was a hip chart down. Very nice trade. Okay, the nice thing about this trade is that this trade is with the trend trade. That means if you can put in your moving averages, all right, like what I demonstrated earlier, all right, trend and then resistance, and you can put in your moving averages, you can find that is basically, all right, a down with the trend trade. So this is a nice setup that was recently traded, and that happens near to October. Okay, all right. Okay, any question here, both from the webinar and from yourself? Okay. Yeah, for the day to end. Now you realize that there is no fanciful things where we traded, meaning that we are every day doing the same thing, every day just applying the same concept. That means, you know, from the trader's perspective, when we look at new trader, sometimes we would joke. Right? Why are we joking? Because for new people, right, they are always searching. They don't know what they want. This one we can understand because we've gone through that path ourselves. Okay, so you have to fix one that you feel comfortable. That means that, you know, there's no one method which is good, because there's always methods that would ultimately not be successful at some point of time. But there must be a method, right? You must be totally comfortable. For example, I tried scalping, and I told you I can make a lot of money with scalping. Okay, but I'm not comfortable with that method. Why was that so? Because I can see myself in the future if I were to continue this path. What happened? All right. So therefore, people like us venture further. Some people venture further to keep on training, and then they forgot what is trading anymore. Okay. All right. So you have to be totally comfortable with the method, and the method that I'm comfortable with are methods that I can relate to. That means I can totally convince myself before I click the button. Okay, so let's try one more time. This is a chart is a weekly chart. That means that this one bar here, all right, one bar is 1 week. Okay, now one box here will be a quarter. Okay, so that means every box is actually 1 quarter, 3 months inside, 12 weeks inside. Okay, now let me ask you one question. Here and here would be a quarter low, isn't it? Now, this long bar here, what happened to price? Price already broke below the quarter low. Yes? Okay, 1 week, I repeat, 1 week it broke how many quarter low? I want to know just from this chart here. 1 week, how many quarter low did this bar break? 3. Okay. Now, what is 3 quarters? 3 quarters means 9 months. Very easy. So is this breakout strong or not strong? Yes? Strong, right? Okay, good. All right, now, when this breakout happens, what are you likely going to do? Sell? Okay, agree? I would think so. Okay, let me just, don't think this is a trick question. Okay, so we have this one here. Now, but price, what happened to price? Okay, you have to see price as moving down, up, down, up, down, up. Okay, we call this a main primary trend. So we call this a primary trend. Okay, now we call this up, all right, a retracement. We call this a secondary trend. Okay, so this is very much in Dow theory. Okay, now if you see this one, it's part of a retracement of this downward move, right? Yes? Yes or no? Good. Okay, we are good here. Now, however, let me just know your thoughts. Okay, just know your thoughts, right? When you see this, let me know what you think. Truly your thoughts, without me giving you any hints. I just want to ask whether now you are more bullish or more bearish. Should you ever make a guess? That means really your inner thoughts. Huh? What do you think? Because this is very, very important, especially for those even in the webinar, right? It has to do with how you interpret the chart. Because what I did, right, is obviously these are things that have happened. Okay? If you realize this is I never give you what counter this is. That means you totally have no idea what this pair is. Okay? And you have no idea what's going to happen in the future. So it's as if you are trading because we don't know what's going to happen in the future, right? When you look at this, there must be certain mindset that you are forming. Okay, so what is that mindset are you forming here right now? Okay, are you more bullish or are you more bearish? I'm asking you to just answer from yourself, from what you have understood of your own method. Not applying my method, but of your own method. Are you more bullish or more bearish? I have answers from the internet already. Bullish, more bullish? Okay, more bearish? Okay, don't know. Okay, you see, we learned many things, right? We learned things like I can guide you to say, hey, look, this one is 2 quarters, it broke already, all right? But you can tell me that, hey, look, Binni, it also unbreak and then moved up. We have the same problem. I can also tell you, look, please follow the trend. The trend is the king, the queen, or whatever. All right, the trend is your friend. We can say this over and over again, but there are certain minds that we can't change. Okay, I don't attempt to want to change that, but I just want to say that really follow the trend and really think of this as 2 boxes. But then what happened? So someone here, right, said draw in the wash line. Okay, draw in the wash line. The first wash line that you can draw is this one here. Okay, which is your wash line. But is this the relevant wash line? Yes or no? The answer is no, right? Okay, because once you see this bar here already, you can draw in another one more wash line. All right? And we always know that there are 2 boxes near here. I'm just going to draw that. Okay, that gives you the very strong lever, which means that if I were to draw my chart properly, if I have a 2 here, so these will be the wash line that I need to draw. And then I'm just going to change this into the blue one here, and there's another one more support level that has been broken, and another one more here. All right, which means that if price continue to go up, nothing happened. I continue to go long this position. Okay, but if I respect the trend, I would be also planning in my counter moves. Meaning that in a trade, right, we do not know what's going to happen. But whenever somebody attack us, right, we need to go and plan for strategy to say, hey, if this happens, we're going to do this. If that happens, we're going to do that, right? And then we're going to plan for the counter move, right? So it means that if there should be a wash and rinse and then comes back down, I will be going short. Agree? Okay. All right. Now, in fact, that when we were trading this live in the class, we were talking about this and what to do already. So the students know about, okay, fine. If it's up, I mean, you know, whatever it is, I mean, it's a long trade. But if it's down with a wash, I mean, I can actually take the short. Okay. So it doesn't really matter, because for us, when we are doing our method, okay, we would have taken our long where. This is a very, very important thing I want to highlight. If we are going for a long, our long will happen at this bar here. Do you see the difference between wash and rinse method versus other method? Because why? So this bar would be our wash bar, because we would have drawn in the wash line here. See that? You see the difference here? The wash bar will be here, and then these will be our rinse bar, which means that we would not be going long at this bar here. Our long would have happened somewhere around here at the bottom. Okay? So when price moves up, we don't really care, because we have already gone in our long side. We are just prepared that if it's turned, we exit our long. That means we exit that bullishness. All right. And then once we have exited, if it's really, really heading down with the trend, we will be planning for the counter move to actually go short. So this is always what we are balancing when we are trading. That means that we are not single-minded looking at one direction. We are always planning for what's going to happen to the next move. Okay. All right. And I'm more in favor of a short here, because I want to emphasize to all my students, it is better if you can follow the trend. Rather than to do counter trend, it's better that you can follow the trend. All right. And this was a very, very recent trade that we did live. Okay. And in fact, that this was a wonderful trade, because you know, we were able to plan for that. So all this thing, and then after that, boom, come back down. See that? Okay, see this very long bar here? This one here? This is your rinse bar, and then this one will be your wash bar. Now take a look at this rinse bar here. It also rinse that strong quarter level. Okay, all right. And of course, what's the outcome? This was a gold trade. Okay, it was a very recent gold trade. Yeah. All right. So, you know, when we use boxes, it doesn't change from a use of support resistance. But what is the difference here is that we are very convicted to this short, to expect, right, that this gold trade, it's going to move down so much, because why? It is flirting, it was flirting with that quarter boxes. All right, and quarter levels are used by the institutional traders, the big guys. Okay, not only that, this quarter, right, these quarter boxes, and this one here was the whole duration of a 9 months move. So that is the difference in this particular trade here in gold. Okay, all right. So when we traded this, the price here was about 1,700 plus. I can't remember the price. Okay, I think, and then it moves all the way down, and that was a huge, nice move for us. It just continue, and continue. We don't really need to look at our position. We don't need to wake up, right, to hurry, to look at the position, because we knew that that was a very strong move. Okay, you don't need to carry your handphone to the toilet. Correct? You don't need to bring your whatever, computer anywhere. So we are quite comfortable with this trade as long as you know where is it. Okay, and in fact, that when I was doing this chart here, I just wanted to share with you all the trades that we did with wash and rinse and auto boxes. All right, so these are how trades could be done. In fact, at this moment, you can draw in one more pattern here. Okay, what was it that you can draw? So this was the wash bar and then pending a rinse bar. Okay, and this is a trade that's with the trend. All right. Okay. Good. All right. Now, the last one, right, was it's the same chart. I just wanted to show you because this one here is gold. All right, at about 1,008, we did actually 1,700 plus. This is the daily chart. Now, why do I want to show you? Okay, I want to show you the trade that happened here. That means the one that's in previous one. Just let me get this one. The one that previously was done. This one, the one that was done here. This that was shown here, right? If you look at it and visualize it in the day chart, was actually around here. This was that price movement there. Okay, and it fits very nicely to theory, such as a lot of people say, hey, look, if this was your support, right? It breaks down and then you do the retracement up here, okay, and then you get your trade. That means that here was that short here. All right, now I would just want to ask you guys out there, whether you are in the webinar or you are here with me, I know that you might not be trading gold. Gold is not your trade instrument, but if you are trading into Forex, if you are trading into instruments that's 24 hours, all right, gold would be a selection. Do you agree with me? Yes or no? Then let me just ask you one question. Did you do your trade at that place? The one that I'm pointing here. Top or not? How about those in the webinar? Very good. You short and never hold. Okay, so there is a difference here, right? So I want to clarify. I said before, methods, they are to me all the same. Okay, there are no bad methods or no good methods out there. Seriously, there are only one that can let you make a lot of money. Okay, what can let you make a lot of money? It really depends on how convicted are you. Okay, that means that are you able to rationalize it and tell a story? For example, this trade was a quarter boxes. Quarter. Oh my gosh, this is quarter. Do you know that how many lessons that I have to do? I will use this very strong phrase to psycho my students that quarter boxes are very important. That means that they were really asking me, hey, Binni, why are you looking at quarter? You are crazy already by looking at day and the week and the month, and right now you want us to look at quarter? All right, but if you really want to know secrets of people who don't work, trade 1 hour a day, for example, and the rest of the days, today, you know what I did? Today I was actually filming my daughter YouTube channel. My daughter Preppy 3 YouTube. We were having fun because it's PSLE marking days. She's primary school. 4 days trapped at home, nothing to do. And next week is revision. Is her examination. We were so bored. You cannot be always studying, right? So we were actually having fun filming her how to clear the rubbish bin. Really, no joke. Okay, she came up with innovative methods of how to throw away the rubbish bin without making a lot of trips to the kitchen. You know what's the method? She told me, you don't need to go to the kitchen many times. You just have to put a lot of plastic bag inside the rubbish bin. Okay, so that when you empty one, and you can take the plastic bag and then put in a new one already. I asked her, but then you still have to bring that rubbish bin to the kitchen or to outside to throw, right? I said, yes, but I feel happier if I can just immediately take the plastic bag and then put it in. We decided to record that as a, YouTube and then post it up. You can just maybe go and Google it, how to throw rubbish without feeling bored. Okay. I mean, what I'm trying to say is this, right? Trading is something that is supposed to bring you money, all right? But if you realize that it is not bringing you a lot of joy, all right, and then you are consuming a lot of time by keep on learning and feeling very stressful, right? Then that's not the right way to trade. How can you trade without not feeling stressful? Cannot be. You have to be stressed because that's money, but overly stressed about it, okay? And then to overcome it would be to be able to be convinced of the method they are using. That means that mine is not the best method, but it's best for me because at least I know what quarter box is very important, very important. Okay, we have to keep on drilling to the students to say, hey, look, emphasize on quarter boxes. When it's there, aim at it and look at it. Okay, so these are tips that I hope that I can impart to you. All right, that means not the method, but the way of seeing things. Okay, you realize that the header that I basically put here would be transformed. Okay. Your psychology. All right. Now with auto boxes, what it does is that it makes you look at things differently. Meaning that you are looking at support resistance, but you are able to quantify that, and not only quantify that, right? You are also able to stay on the trade or be very, positive or confident about that trade, and then that makes a huge difference. Because some traders can make money, but they make 100 and then they run. All right, but when they lose money, they lose 1,000. Yes, so you can't be doing this. You need to make 1,000, lose 100. But why is it that they only make 100? Because they hold on to their losses, but they run away with their profit very quickly. You can't blame them for running away the profit, because the profit will behave like this. The profit will go like this. It goes up by $50, very happy. It goes to $100, very happy. It goes to 200, it goes to 300. Suddenly it will drop to 50 only. The profit will always happen in this manner. After that, it will drop to 0. Then after that, it will go into negative 100. Then what happened? Then it goes up to 100 and quickly get it. When you get the 100, it will go to 1,000. Correct? It happens like that. But your losses will always happen in this manner. Negative 100. After that, negative 200. Then negative 300, 400, 500, 800, 1,000, negative 1,000, negative 1,002, negative 1,005. Never go up one. Losses is always like that. All right. So why is that? So what is the difference here? The difference is where you have traded, the location that you have traded. Okay. And auto boxes tells you when are all those people concentrating at. For example, people were rushing to dollar yen. The eyes was on dollar yen when a lot of students, a lot of people were suffering in stocks. I have to tell you, during the ascent, that means the move up in dollar yen from 110 all the way to 149, one asset suffered so badly. What's that? Stocks. Okay, but dollar kept on going up. I remember I was doing a TCS interview, and the interview asked me, how far do you think that dollar yen can go? All right, at that point of time, dollar yen was 135. Because it broke that key level, 136, right? 135. I said it can go to 140, but it can go to 145. That's what I'm expecting at that point of time. Okay, why? Because that was an easy trade of dollars, okay, when the stocks wasn't doing well. So don't just focus on one, we move to those that can move very well. Okay, so that's the key thing. All right, so if you can put in your moving averages, for example, to see that gold trade is very clear, it was a down. Okay, if you can fine tune that in the lower time frame, it was a down. Okay, so that was a very clear trade with dollar yen. All right, now I don't want to do any live things because today I actually covered a lot of trades already. But what I wanted to do is I wanted to just take some questions, okay? Because today I have covered a little bit into psychology, okay? Now psychology is very important if you realize that. I've covered a little bit into psychology, jokingly, into things that you will encounter, because these are things I encountered myself, right? But these are psychology, these are problems, right, that can be managed. Meaning that the problem that you have encountered, right, can be managed. So we manage that by, number one, expecting a wash and means can happen. So that's the first thing that you know. Number two, by knowing when a big move can happen by counting boxes. Okay, now how do you draw your boxes? You draw your boxes starting from what time frame? Week. You always draw your boxes in the week time frame first. And then after you draw your boxes in the week, what do you do then? You move to the day time frame. So these are always a step. And where do you spot your wash and means? In which time frame? Always the day time frame. Okay, so these are the steps which are hard steps. Now, how many boxes are good enough? 2. Okay, either 2 weekly boxes or 2 daily boxes. Of course, the higher time frame, the better. So we always go by 2 quarterly boxes, 2 monthly boxes, or 2 weekly boxes or 2 daily boxes. All right. So just now in the gold example, we work at 2 quarterly boxes. Okay. At pound yen or dollar yen example, we look at weekly boxes and monthly boxes, and in the pound yen, we look at week boxes as well. Okay, we never go below the day to see the boxes. We always see the boxes either in the week or the month or the quarter. Okay, now I know that you don't have that tools to draw the boxes automatically. It doesn't matter. Just every week, you just update once only. Okay, now I want to know whether there's any questions. If not, I will just pass the session back to Ethan. But before that, right, I would be doing the third session. Okay, I'll be doing the third session that deals with automations and deals with psychology. Okay, that means that how to use automation, right, to remove your psychology issues. Okay, so if I see you live here, right, then tell me the psychology problem that you face. Okay, I probably have encountered them before. I faced one very bad psychology problem myself. Okay, at some time of my career, suddenly I cannot see prices. You know what I'm trying to say? Suddenly, all these prices to me look so strange. That means I cannot see prices. I just don't know how to see prices. Yeah. So you realize that my methods are all color-coded and all very structured. This is to help me to overcome the fact that at one point of time, I cannot see prices. Nobody knows, right? Yeah. I cannot see prices in my whole career twice already. So I also don't know what. Pass back to you, Ethan. Yeah. Let me just cover the third one. Okay, yes.
Yep. So thanks again to Binni for sharing her insights today. So before I end the session, right, I just wanted to highlight again some of the educational resources that IG has to help you. So the first one we have is the IG webinar libraries, where we update update all the previous sessions that that we actually hold. I will be uploading this session within a week. So if you are keen to rewatch some of the concepts or you have missed out some of the parts because you attended a little later today, just feel free to go to this IG Academy library by either Googling IG Webinar Library Singapore or by accessing it on our YouTube channel. Just search for IG Singapore and it will appear. So these are some of the content that we actually regularly update over here. So the second thing that I wanted to highlight would be on our socials. So if you're on Instagram and you want to follow us on some of the updates, just have a search at IG Singapore to follow us. If not, this will probably be something that's more applicable for existing traders. So we also have some in-house analysts who are regularly updating some of their views, their news, some of the key levels on some of the technical analysis that they have done. So these are also regularly updated on a daily basis. So if you are keen to follow us and have this news on the go, right, just have a scan of on this QR code right here on Telegram as well. If not, then if you are new, then we also have this current account opening promotion that will be ending this month. So if you are new to IG and you don't have a trading account with us, just feel free to open a live account with us. All you need to do is to deposit at least 5,000 Singapore dollars and place one trade. By the end of the month, then we will be able to credit $288 to your trading account as kind of like a onboarding incentive. Okay. Last but not least, right, I'll just leave this feedback form here. It's just a very quick 10 question feedback form, which will probably take less than a minute to complete. So the intention of me flashing this is so that we can collect some data to cater more relevant topics or content that you would prefer to see. So any feedback is definitely welcome, be it on content, on speaker, on what kind of assets that you like. You want us to cover Forex, to cover gold, to cover shares, anything, just let us know in this feedback form. Okay. If not, I think the session today has been very useful. Definitely, it will give you more perspective. So if you have your own trading strategy, that's good as well. But let's say if you're trading breakout, right, and then you want to identify fake outs as well, I think wash and rinse and using some levels from Autobox can definitely give you more perspective in terms of, to when you want to execute your trading decisions. These are actually very valuable knowledge that will be able to help you to get better results in your trades. So if not, right, then we will see you next week for the last part of our 3-part trading series, where Binni again will be sharing a little bit more on trading psychology and how you can manage that using automation. So I think automation is something that isn't there has been a lot of people talking about automation, but I think it amongst the retail clients or retail traders, this is something that's not very conventionally or traditionally practice. So this is something that's newer also with technology. IG also has certain platform that can support automation like MT4 and Pro Real Time. So I think the next session could be an interesting one if you are keen to explore further into automation and not so much on click trading. Then just attend the next session. Sign up for our seminar if you want to join us here, or if you prefer it online, feel free to sign up for the next one as well. Okay, with that, I'm going to end the session here. Thanks again to all viewers and, of course, everyone who attends the physical session today. All right, good night, everyone.
Thank you. Bye-bye.